Which companies will be next to join the $1 trillion club? Right now, 6 companies are in that $1 trillion market cap club. Apple over $3 trillion, Microsoft over $2.5 trillion, Saudi Aramco over $2 trillion, Alphabet Google over $1.5 trillion, Amazon at $1.35 trillion, and NVDA at $1.138 trillion. You might remember in January, I did a video similar to this one, and I told you that NVIDIA was going to be the next $1 trillion company. Now, NVIDIA is the future of AI, and it was also on the AI series I just did for Pick and Shovel Plays, Semiconductors, the New Oil. And this one's not hard to see it at $1 trillion market cap. So which companies will be next to join that $1 trillion club? I've got 7 stocks to share with you today. Now, this first company was already over $1 trillion at one point, and it lost the title. And I think it'll get back there relatively soon. Right now, sitting at just over $900 billion on that market cap. Price to book is 19.5. Price to sales 10.64. The PE for this year's estimate is 83. The PE for next year's estimate is 60.7. So we figured out which stock it is. Now, Kathy Wood from ARK Invest says that Tesla stock will surge over 1,100% to $2,000 a share by 2027, just 4 years from now, as its planned robotaxi fleet rolls out, giving the company a market cap of over $5 trillion. And Ron Barron says Tesla stock could be $1,500 by 2030. No matter how you slice it, there's a lot of excitement around Tesla, and it's a very polarizing stock. There are a lot of bulls and a lot of bears. You can see at the end of 2019, this was about an $81 billion market cap, and it ripped to over $1 trillion in late 2021, falling from that $1 trillion plus market cap in 2021 down to almost $350 billion market cap here in 2023, just in January of this year. We bounced from that $358 billion market cap up to right now, it's trading just around $900 billion. And Tesla's reporting earnings soon. The stock has surged this year. Lots of excitement. Deliveries beat expectations. The new Cybertruck, the first one rolled off production in Austin. And there are a lot of reasons to be bullish about the company. It is an expensive stock here, but for good reason. People are paying a premium for that future growth. But you have things like robotaxis that Kathy Wood talks about. You've got solar. You've got battery storage. You've got moonshots like Optimus, their robot. I mean, Optimus could be a huge play, and it's not necessarily the reason you go buy the stock today, but really Tesla is a green energy conglomerate. It's a tech conglomerate. It's an AI company. It's not just your mom and dad's car manufacturer. So Tesla will more than likely be the next $1 trillion company, regaining that title soon. I think there's a good chance you even see $1 trillion on Tesla still in 2023, which would be an amazing run. Going from close to $350 billion to $1 trillion in 12 months. I think it's possible. This next company is just under $800 billion market cap right now. Price to sales ratio is just under a 7. That PEG ratio is at 2. You generally want that closer to 1, but 2 is not crazy expensive, especially look at the PE ratio. Next year's estimate is a 21. So you could argue this is probably the least expensive stock that will join that $1 trillion club next. And this also is a $1 trillion company that lost its title. So I think it's safe to say that Meta will be back in that $1 trillion club. But could Meta be a $2 trillion stock? So based on 2023 earnings per share estimates of $11.94, the company will earn as follows. And this shows you from 2023 to 2030. So in 2030, 7 years from now, the earnings per share estimated at $31.74. In the year-over-year growth, you can see 22% and then slows down to 10%. These prices give Meta a market cap between $1.6 trillion and $2.4 trillion in 2030. Now, there are certainly no guarantees with any of the companies we're going to cover today, and Meta certainly has its share of risk as well. They've invested a lot of money into AI, which has improved things like Reels. So Meta's actually using AI to drive those different videos to you on Instagram and Facebook based on what they know about you. But additionally, of course, they're working on AI for Metaverse. And so they changed their name from Facebook to Meta, and they're really banking on the future of the company being Metaverse. And I think there's some risk with that, but it could be huge at the same time. And as the economy improves, more people, and especially small businesses, are going to put money into advertising on Facebook. But I think most people would agree that Meta stock will be worth more in the future. I think there's a decent chance in the next 12 to 18 months that you're back over $1 trillion market cap. and it could be as high as $2.5 trillion in 7 years. This is another one that was in that $1 trillion club. This is back at the end of August 2021. It was over $1 trillion, and it fell off a cliff all the way down to a $243.95 billion market cap. This was back at the end of 2022. So from October 31st, 2022, this went from under a $250 billion market cap, now around $800 billion. This next company has a market cap of $727 billion. Price to sales ratio is a 2.67. Price to book, 1.48. The PE ratio based on this year's estimate, 21.7. Next year's estimate, 19.2. Now, I think that Meta will get to that $1 trillion club before Berkshire Hathaway, but I think Berkshire Hathaway will be in that $1 trillion club very soon. Now, this doesn't have the growth that some of these other companies have on this video, but let me show you some numbers. So can Berkshire Hathaway add another 50%, basically over double from its current valuation over the next 7 years, 2030? One possibility is to put its enormous cash stockpile to work. The company continues to buy back its shares quite a bit, which boosts the value of the remaining shares. That does help. Warren Buffett and his team have also invested in other publicly traded companies, including adding to Berkshire's stake in 4 companies in the fourth quarter of 2022. BRK is a conglomerate, and it owns businesses such as, Dairy Queen, insurance, railroad, energy, and so on, and should increase nicely if the economy continues to perform well over the next several years. And of course, BRK does have a portfolio of publicly traded assets and owns companies like Apple, and they'll benefit from that as well. This article here talks about one of the risks is if something happens to Warren Buffett. Of course, he's getting up there in age, and if something were to happen to him, how is that going to impact the company and the stock and the market cap longer term? I mean, this August, Buffett's going to be 93 years old. And for now, Warren's in great health, and he's one of the best investors of all time. In fact, I want to do a quick intermission here. I want to share a quick clip, a short here, Warren Buffett talking at Berkshire Hathaway's annual shareholder meeting. This is great advice for investors.
Well, we make bad investment decisions plenty of times. I make more than Charlie because I like to think it's because I make more decisions, but probably my batting average is worse. But I can't recall any time in the history of Berkshire that we made an emotional decision. That I know the movie had Jamie Lee in there, but that was for laughs. But have we ever made an emotional decision?
No.
Oh, yeah. That's in business we're talking about. Yeah. No, you don't want to be a no-emotion person in all of your life, but you definitely want to be a no-emotion person in making an investment or business decisions.
So this chart's not nearly as drastic. This is going to be a lot less beta in something like BRK. You can see it's kind of been in a slow, steady climb upwards. The highest it got was just under $800 billion in that market cap, and that was in March of 2022. And recently here, it got to $589 billion. This is back September 19th, 2022, and it's bounced off that, trading closer to $750 billion now. This next company has a moat, and if it weren't located where it's located, the company would be worth more. Right now, it's just over a $500 billion market cap, 7.42 price to sales, price to book 5.39. The PE for next year's estimate only is 16.4. So this company has to double its market cap to get to $1 trillion. Now, if you watched my deep dive on the semiconductor industry, you know just how dominant this business is. And if you haven't seen that, go check it out after this video. I'll put a card up at the end. That video really breaks down the semiconductor industry. It shows you the 8 primary segments, and it goes really deep into different sectors and types of companies and stocks that fit in those different sectors and really how it all works together. I also share my top semiconductor holdings on that video, so check it out. So Taiwan Semiconductor, listen to this stat. Taiwan produces over 60% of the world's semiconductors and over 90% of the most advanced one. And Taiwan Semiconductor controls the majority of that. So can Taiwan Semiconductor cross the $1 trillion threshold by 2030? Now, this article is a few weeks old, but it says here it only needs to grow at an 11% compounded rate, which isn't that much. In fact, it's less than that if you use today's prices. The big risk here is the fact that it's located in Taiwan and that all those geopolitical tensions between the US and China. If it weren't for those reasons, I think that this stock and the market cap of this business would be much higher. I think it would probably be $750 billion today if it weren't for a lot of that drama. So I think it's safe to say that they can double that market cap, especially with the new fabs they're building. They're building some in Arizona that could even even boost the sentiment of investors. You think about, they start actually producing these chips. It's a fab. So they're manufacturing chips for some of the largest companies in the world, like NVIDIA, AMD, Apple for their M2 chips, Tesla today announced they're going to be working with Samsung as well. I think probably both. But as they start producing more of those chips in Arizona, that sentiment could improve. You could see the stock go higher, which is going to make that market cap go higher as well. So this could be an opportunity, and I think this will be a $1 trillion company before 2030. This company has grown a lot in the last few years. I mean, you can see back here in 2017, it fell off a cliff. It was $18.73 billion. At its highest point, end of 2021, $625 billion market cap. Basically cut its value in half to $321 billion here just the end of 2022 in October. And it rallied off that, trading closer now to that $550 billion market cap. So it has to double, less than double to get to $1 trillion. This next one's trading at a $492 billion market cap today. Price to sales ratio, 16.24. Price to book, 13.64. The PE on next year's estimate is a 25. So this one is going to have to over double from today to get to $1 trillion. Visa has a market cap of about $475 billion. It's slightly higher now. To reach $1 trillion by 2033, it has to slightly more than double over the next 10 years. Visa's stock gained 465% during the past 10 years, much more than doubling, so it's not hard to imagine that happening. Now, just because a stock gave you a 465% return in 10 years, past performance does not equate to future results. You know that. I think this one could have a little bit harder time getting to that $1 trillion market cap, but I do think it's possible. It does pay a small dividend, 0.75%. P ratio on this says 32. At $492 billion, will it get to $1 trillion in the next 10 years? I think the answer is yes, but it's going to be harder to see Visa at $1 trillion, and it's going to take longer than the previous companies that we've talked about. Over the trailing 14 years, and again, past performance does not equal future results, Visa has averaged on annual total return, including dividends paid, it's about 21%. I don't think you're going to get 21% going forward, but at 21%, that means that it's doubled investors' money on average every 3.4 years. Well, that means it's going to be $1 trillion company in 2027. So the highest that Visa's market cap got was just below $500 billion, about $482 billion. This again was in 2021. It was the summer. And a little over a year later, close to October 2022, it dropped down to a $338 billion market cap. And you can see it's bounced off that. This chart showing closer to $456 billion market cap. This is a Fired Up Wealth community favorite. Lots of members are buying this in Discord recently. And I said it was a pound the table buy if it got below $450 a share. And it did that briefly. It had earnings. Earnings were pretty solid. And now it's over $500 a share. So a nice 10% pop in a week, which doesn't sound exciting, but this is a high quality company, solid balance sheet. It's been a solid performer, and I think it continues to do well longer term. So it is under a $500 billion market cap right now. It's closer to $470 billion market cap. This says 475, but it's under $500 billion. Now the PEG ratio on this is 1.73, which is still fairly attractive. It's a little bit expensive. Price to sales is only 1.35, and the PE for next year's estimate is a 17.3. Now this isn't like a hyper growth stock or anything. So over the past 25 years, again, past performance does not equal future results. United Health has averaged an annual return around 19%. And I think it could be slower moving forward, but I wouldn't be surprised to see it closer to 15%. If we include dividends, it's actually higher, so about 20%. I think you can get around 15% with dividends over the next 5 and 10 years. But based on 20%, that means the company has been doubling investors' money on average every 3.6 years. Now, I don't think this is going to be $1 trillion company in 3.6 years. It could happen, but I don't think that's going to happen. But I do think it's very possible that before 2030, this could be $1 trillion market cap. And one of the reasons for that is one of their subsidiaries is called Optum. Now, Optum has 3 segments of its own. It provides everything from pharmacy prescription refills to data analytics and software to healthcare organizations. And a lot of people don't realize this. Optum has consistently grown faster than the insurance segment, and it generally produces higher margins too. Thanks mostly to Optum, Wall Street consensus estimate calls for United Health to grow its full year sales from $287.6 billion in 2021 to more than $497 billion by 2026. So you can see where this could easily be $1 trillion company over the next even 5 years. It's possible. And for a boring company with a solid balance sheet that pays you a dividend, it's pretty solid growth. And it's one of those that gives you some diversification in your portfolio. And I'm a fan, and I do own UNH. According to a quick Google search here, market cap $468 billion, P ratio 22.5, dividend yield 1.5%. And this is a really nice chart. I mean, this goes back here to 2009, it was $33 billion market cap. And it kind of double topped. It got over $500 billion, close to $520 billion. And it has sold off here for a few different reasons. Now, earnings proved to us that some of those fears were probably overblown. And this did get down closer to $400 billion. It was $427 billion market cap. And now it's hovering closer to, $468 billion that I just showed you. Now, I've got one more stock to share with you. And this one might be my second favorite on the list behind Tesla. It has the most potential upside. It has a nice dividend. And for the most part, it's under the radar. Just not a lot of people know about the company. They're not excited about the company. They consider it more of a boring company. But I think this is a solid investment that could make you some money in your portfolio. And it gives you some diversification and some of that dividend income. But this is really more of a growth stock that pays you a nice dividend. Now, before I share this stock with you, if you're new here, please subscribe to the channel. Click that bell for notifications. I'm trying to get this channel to over 50,000 subscribers. You can help me out today by subscribing now. Also, if this video is helpful, drop me a like and drop me a comment. And I need to announce this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. And if you want to join our private community, Patreon Discord, visit patreon.com/firedupwealth. So what is the seventh stock I'm covering today? Now, a moment ago, I said the most upside. What I mean by that is market cap growth to get to $1 trillion. I don't think it has more upside than Tesla. I want to make sure I'm clear on that. But I am excited about this company. It's about a $400 billion market cap. Price to book, it looks expensive, right? 17.3. But then you look at the PE ratio for next year's estimate, only 20.2. So the stock for this company, the average annual return over the last 10 years is over 41%. If you're an Apple user, you're benefiting from Broadcom wireless connectivity hardware. I recently did a video on Broadcom on the channel, and I called it an under-the-radar AI stock. And it's no joke. Broadcom benefits significantly from AI. When you think of these large data centers, these supercomputers, they supply the fabric that connects all that together and makes it work. And Broadcom has been performing well. Free cash flow and revenue both jumped 16% higher versus the year ago period. 8.9 billion and 3.9 billion respectively. You can see some of the growth here since 2014. And you've probably heard that Broadcom is trying to acquire VMware. Now, essentially what this is going to do is help them get more into cloud services. And it's really going to make this company a hybrid, half hardware and half software. I think that'll improve margins and it could stimulate lots more growth for the company down the road, lots of cross-selling and so on. So Nick is saying here that they need to grow free cash flow to at least 66 billion by 2030, and that would give you $1 trillion market cap. So going from 21 billion to 66 billion. So over 8 years, that represents an average compound annual growth rate of about 15%. And he says this would be a lofty goal, but I think it's going to happen. Thanks for watching, guys. Make sure you subscribe, click that bell for notifications, drop a like, drop a comment. Have a great rest of your day. Take care.